good morning to my dear students. Welcome back to online classes. So, in my previous videos and all, we have to discuss about few adjustments, few transactions related to the chapter dissolution of partnership form. In this class also, we have to discuss about the same topic, same chapters, questions under the chapter dissolution of partnership form. So here question is there. According to this only we have to move to the particular solution. Let's first we have to read the question, what the question they are given. First we have to read, listen carefully. Whenever you people have to facing the question in the examination, first 15 minutes they will give a time for you people. In that 15 minutes, what is your role means, you people have to read the question paper carefully without wasting of time. Okay, first you have to read the question, you have to understand the question. After that, you have to make the totals of the balance sheets. If balance sheet totals will not be equal or balanced, then you have to attend that question in the beginning itself, because you will get the grace mark for your paper. Approximately, they don't give such a kind of problems and all. So even though you have to get a confidence about that. So let's we have to read the questions, what the question they are given. So here, question they are given, Shruti and Shilpa and Shreya were partners. So here how many partners are there? 3 members are the partners who are participating in the partnership business in the partnership accounts. Share the profit and losses, the ratio of proportion is given, 2:2:1. They decided to dissolve the firm. So here, whatever the profit, whatever the loss they have to get, and also if any undistributed reserve or undistributed profit and losses they are given in the balance sheet, that everything they are distributing according to the ratio of 2:1. Therefore, the profit sharing ratio is 2/5, 2/5, 2/5. How the 2/5 you get? 2 plus 2, 4, 4 plus 1, 5. So therefore, 2 divided by 5. Again, second partner 2 divided by 5, and the third partner 1 divided by 5. So this is the profit sharing ratio they have to get. They decided to dissolve the firm. So in the beginning itself it will be expressed that, so these 3 partners decided to close the company, to close the firm. Their balance sheet as of 31st March 2020 was as follows. So here the information they are given. So 31st March 2020, they decided to dissolve the firm was as follows. Their balance sheet they are given. So in the balance sheet, so liabilities are there, assets are there. So first we have to classify the liabilities and assets where they have to affect it in our next upcoming account. Whether the assets will come to the particular account or else which side we have to record it, everything we have to classify here only. So creditors is a liability, revaluation account, realization account it will come. Bills payable liability, realization account we have to write this one. Shruti is loan. Shruti is a partner. So if any partner has given loan to the company means it will not be treated as a liability. So Shruti is a partner. If the partner has paid by loan means it should be reflected under one place where means bank account only. Okay. So apart from Shruti, so remain apart from these 3 partners, any X persons has given a loan means then it is a liability. Why it is a liability means the outsider is not a partner of the company, he is not a member of the company, though we have to give the value to the outsider. So for that sake it will be considered as a liability. And Shruti's loan where it will come? Bank account it will be given. General reserve it will come to partners capital account, PCA. So partners capital account to write under credit side. Capitals, these are the opening balance of the partner's capital account. Let's come to the asset side. Cash at bank they are given. So it will come to the bank account only as a opening balance. Remaining all the assets we should record a realization account debit side under step number 1. The step number 1, whatever the assets they are given, the all assets we have to record it according to their book values only. So this is the information is given. Let's move to the additional information. What is the additional information they are given in the question itself means? So here, assets realized as follows. So they are given realized is nothing but sold. So the company has to sold all the assets. So what are the assets they are going to sold? Debtors realized 10% less. So here the value they are not given particularly. If the value is given this, we should consider that value. In this question, apart from values, they are given percentage. Some particular percentage they are given. Therefore, so less is nothing but, so book value we should be considered as a 100%. Book value, what the value given in the balance sheet, that value will be considered as a book value. So that will be considered as 100%. If less means we should minus from the 100. More means we should add to the 100. Are you got it the logic? Less means minus from 100. More means plus to 100. We should add that value. Added to that value. And also buildings realized rupees 60,000. So here value directly they are given. So totally adjustment number 1, realization account step 3, that means credit side once we have to write, again bank account, so we should write debit side. So totally each adjustment we should write 2 places, twice we have to record it. Next, adjustment number 2, furniture was taken over by Shruti and machinery was taken over by Shilpa by rupees 15,000 and 20,000 they are given. So totally furniture and machinery are the assets. What will happen here? The assets will be taken over. Who is going to take over? Particular partner has been taken over. So if any partner assets has taken over means it will come realization account step number 5. So step number 5, which side it will come? Credit side of realization account. And again where it will come? Partners capital account. Debit side we have to record it. Totally adjustment number 2 we should record it at the 2 places. One is realization account debit side, credit side we have to record it, and partners capital account credit side we should record it. This is the exact criteria. Next, adjustment number 3, creditors and bills payable settled at a discount of 5%. Here the concept they are given discount. The term discount means reduction, some kind of relaxation. So the creditors and bills payable, the value given in the balance sheet, that is book value, we should consider as a 100%. 100%. So less means minus from 100%. We have to deduct it, we will get the values. And also adjustment number 3, directly it will come realization account. Totally adjustment number 3, once we have to record it, realization account, debit side, again bank account, credit side we have to record it. In the realization account step number 3, what it will say, we have to find out the the deduction, after deduction, what is the liability we are going to pay, that value we have to classify and we have to find out under step number 4 of the realization account. And again the same value where it will be reflected means it will be recorded under bank account credit side, we have to record it. And adjustment number 4, what it will say is cost of dissolution amounted to rupees 1500 they are given. Cost of dissolution amounted to rupees 1500 they are given. So here the cost, who is going to pay, that we have to clarify. So here the cost of dissolution will be paid by the company on behalf of the partners. The company will pay the dissolution expenses. Therefore, with this transaction we have to write realization account debit side under step number 7. Step 7 we have to write amounts. Again bank account we have to write credit side. So totally, so 2 places we have to record all the transactions. And finally, what they are going to conclude here, prepare. What we have to prepare? Necessary ledger account. So necessary means the account which is helpful to the business, which are supporting to the one account to the another account. That kind of account we have to prepare. Approximately, so we have to prepare only 3 accounts in case of the dissolution of partnership. Number 1, that is realization account. It is compulsory we have to prepare. So numbers 2, which account we are going to prepare? Partners capital account. Why we have to prepare? To know the settlement of capitals of the particular partner, we prepare partners capital account. And finally, we have to prepare cash or bank account. In the question, just they are given cash means we should prepare cash account. Instead of cash, they are given cash at bank means we have to prepare a bank account. If sometimes both the transactions they are given in the balance sheet, so in the end of the question they will clearly mention that you have to prepare particular so and so account only, like that they will be asked. So according to that only we have to prepare the ledger accounts of the particular company. So this is the question, what are information they are given. So just we have to read the question, analyze the question, and later on we have to move to the particular solution regarding this question only. I think students, you people have been understood very clearly the question number 8, I think so. So in this question we have to given the same simple information which is reflected in the previous question. In the next video onwards, definitely we have to prepare different adjustment and different questions which we have not solved in the previous classes. So that questions we have to discuss later on. So now we have to move to the solution related to the same question, that is Shilpa, Shruti and Shreya, what the partners they have started their partnership business. So on that we have to move to the solution relating to that information. Okay students, I think you people have been know very well. So very interested, you have to solve the solution. We have to move to the solution, and first we have to draw the columns for number 1 account, that is realization account. Draw the columns for realization account. The first account is realization account. Write down the heading realization. So we should draw the columns for realization account and we should fulfill the conditions of all what we have to do in the blackboard. So first debit side particulars, amount. Again credit side we should write the same transactions, again particulars, amount. Particulars, amount. So this is about the format of the realization account. Next we have to go to the solutions of realization account by following some steps only. So here step number 1, always what it will say, realizable assets at book value, what the value given in the balance sheet. The same assets value we have to record it without any changes. So step number 1 we should write to realizable assets at book value. So we should underline this concept, to realizable assets at book value. So which of the assets we have to record it under step number 1 in the previous balance sheet? The asset side they are given the details of asset except cash at hand. Remaining all the assets what they are given in the balance sheet, it's the same assets we have to record it here. So here first we have to record it to debtors. So to debtors. Next to stock, to furniture, to machinery, and again to buildings. So these are the 5 assets which is available in our question as in the previous balance sheet. Now stock, the value of debtors they are given 30,000. We should write in the amount column directly 30,000. After that stock value it is also given 30,000 in the previous balance sheet. The value of furniture they are given 22,000. The value of machinery they are given 20,000. After that the value of buildings is 50,000. These are the values which they are given in our balance sheet. This is step number 1. Apart from this, no other assets are available in the balance sheet, so we have to record only those assets which are given. Next, come to this step number 2. Step number 2, always it will come to the credit side of the account, that is by external liabilities. External liabilities at book value. Book value. So here, what are the liabilities we have classified in the previous balance sheet? We have only 2 liabilities, that is by creditors. Next by bills payable. By bills payable. The value of creditors they are given 30,000 in the previous balance sheet. The value of bills payable is 20,000 which is given in the previous balance sheet. So this is step number 1 and step number 2 it is purely belongs to the previous balance sheet. Let's come to the adjustment. So remaining steps we should convenient with the help of the adjustments only. So step number 3 is always available in the credit side. We should write the heading by bank account. In bracket we have to mention AR, that means assets realized, and underline this concept the heading. So assets realized. So where the assets realized is given, it is always given in the adjustments only. So adjustment number 1 it will say that debtors realized. So realized is nothing but sold. 10% less than book value they are given. So what the value given in the balance sheet, that is 100%. If less means we should deduct from the 100%. More means we should add to the 100%. Are you got the concept? So therefore, which are the debtors here? First, debtors realized 10% less. The value of debtors given in the 30,000. 30,000 into 110, we will get 90%. Therefore, so 27,000 is the value of debtors we have to wrote in the inner column. And also there says that stock realized 15% more than book value they are given. So actually the stock is given in the balance sheet. So by stock, the value of stock is 30,000 plus 30,000 into, here what the concept they are given, 15% more than book value. What the book value is given, we should consider 100%. More means we should add that 100%. Book value is 100 plus 15, so the value is 115%. Therefore, the value what we have to get is that is 4,500 is the value of stock in the balance sheet. There, sorry, adjustments they are given. Next, in the same adjustment, they will say that buildings realized rupees 60,000 they are given by buildings. $60,000. Three assets are realized. So once again, before making the total, just you have to cross check how many assets are recorded in the step number 1, 2, 3, 4, 5. In the adjustment number, step number 3, how many assets we have recorded? 1, 2, 3 assets. Remaining 2 assets we are not recording. So what about that assets? Whether the assets will be taken over or we have to forgot to record. So let's see. Adjustment number 2 will say that furniture and vegetables taken over. That means that will be taken over. It will come further step. Now we will make the total of this. So we have to get 1,21,500 rupees. We have to get 1,21,500 rupees. How this value will get made? By making the total of these three, we will get the value that is 1,21,500 rupees. They are given. This is step number 3. Next, come to the step number 4. To bank account. In bracket, liabilities paid. So this is step number 4. The step number 3, we should sell the assets, and step number 4, it is compulsory the ethical that we have to sell the liability. So here the adjustment number 3 will say that creditors and bills payable are settled. Actually, how many liabilities we have? We have only 2 liabilities. So here the information is given: creditors and bills payable settled at a discount of 5%. So here we are settling. Settling is nothing but paying. So 2 creditors, 2 bills payable. The value of creditors which is available in the balance sheet is 30,000 into 5% less means we should deduct from the 100. Therefore 95%. We get one value. Again, bills payable. So the value of bills payable is 20,000 into 95%. Therefore, what is the value we have to get? The value of creditors is 28,500. The value of bills payable is 19,000. Well, adding these two, we will get 47,500. 47,500. This is the payment of liability. This is step number 4. Remaining steps may be or may not be, but last 2 steps will be affected. So step number 5, what we say, if any assets will be taken over, we should record a credit side of the account. If any liability is taken over, we should record it the debit side of the realization account. So in the question it says that, so 2 assets are taken over. Which are those assets? Furniture Shilpa. So therefore we have to classify that. So this transaction belongs to the partners. While their settlement, we should deduct these values and the remaining amount we have to pay to that partner. And we will write by partners capital account. We will write the heading by partners capital account and I'll make it underline. And next, so first we will be taken over by Shruti capital account. Why we should record this value in bracket? We have to mention furniture taken over. So what is the value of furniture? So the cost of furniture is 20,000. The cost of furniture is 20,000. So she will took over for 20,000. And again one more asset will be taken over by one more partner, that is by Shilpa capital account. In bracket we have to mention machinery taken over. So what is the value of the value she will taken over the machinery? That is for 15,000. This is number adjustment number 4. Sorry, step number 5. Step number 6. What it will say? If any liability taken over. Are you got it? If any liability will be taken over. So here actually we have two liabilities. The two liabilities we are paying here, therefore no more liabilities we have taken over. Therefore step number 6 we won't consider. Ignore that. Next, step number 7. Always realization expenses or dissolution expenses, both are same. So here cost of dissolution they are given amounted to rupees 1,500. So here they are given directly cost of dissolution, not even paid by particular partner, so it is paid by the company. That will come to the debit side. Always it will come to the debit side only. We will write to bank account. So under that we have to write dissolution expenses. Dissolution expenses amounted to rupees 1,500 rupees there. So like this manner we have to fulfill all the 7 steps. So remaining out of 2 steps, any one will be affected, whether we have to get a profit or else we have to get a loss. Just see whether we have to get profit or loss. So I think in this problem we have to get only profit only. So we will make the total of the credit balance. We will get 2,06,500. We will get highest value from credit side only. So we will write 2,06,500. Same value we will write 2,06,500. So 2,06,500 minus all these values, we will get a difference, that is 5,500. We will get the difference. And we will make a small note for this. 5,500 we will give a heading to partners. So where we have to record this value is to partners capital account. In bracket we have to mention that profit. Finally we will get profit. If the company will be sold, sometimes it will incur losses, sometimes we have to get a profit. So what we have to do about this profit? We have to distribute it between the partners. How we have to distribute it? According to their ratios. Where the ratios is available? In the beginning of the question itself they are given. Therefore here the partners is Shruti, Shilpa, the third partner is Shreya. So the profit is 5,500 into 2 by 5, 5500 into 2 by 5. Now the total is, first partner will get 2200, double two double zero. Second partner will get the same double two double zero. Last partner will get double one double zero. While making these three, again we have to get the same value. 2 plus 2 4 plus 1 5. 2 plus 2 plus 1 we will get 5 double 5 double 0 as it is we have get. That means we will get a right kind of distribution. This is about first account that we will consider as a realization account. So here one account will have a chain link with another account. Let's we have to move to preparation of the second account, that is partners capital account. Let's we have to draw columns for the second account. So we will draw the columns for second account, that is partners capital account. Partners capital account. And we will draw the columns for this. So we have three partners. We will draw the columns for three partners as per the convenient. And we will fulfill all the conditions what we have recorded in the previous questions and all. Debit side, we will write the contents particulars. So the first partner is Shruti. Shruti. Shilpa. The third partner is Shreya. Again, let's come to the credit side one more. Again, we have to fulfill the conditions. So the first particulars. First partner Shruti. Second partner Shilpa. Third partner Shreya. Debit and credit we should write compulsorily because it is an account. It is not a statement. If it is a statement means no need to write. If it is an account means we should write compulsorily without any changes. So now we will draw the columns for partners capital account. You people also draw the columns in your classwork. So here we follow some steps while preparing this. We should follow some steps while preparing this. So first, step number 1 under partners capital account, always we should transfer the opening balances. Where the opening balance is available, always opening balance will be available in the previous balance sheet under the side of liabilities, that is left hand side. We should write by balance brought down. Balance brought down. So in the balance sheet itself they are given the opening balances 40,000 for first partner, 30,000 for second partner and 20,000 for third partner. This is the opening balances which is available in our previous balance sheet. And again, we have to go through the whole balance sheet itself. One more transaction is there which is affected to our partner's capital account. Which is that one they are given? General reserve they are given. So here, general reserve, where it is available in the balance sheet? Which side? Left hand side, that is under liabilities is there. So we have to transfer to the right hand side of the next account and we will write that heading by general reserve. So the value of general reserve is 10,000, which we have to distribute it in the ratio of 2:1. Therefore, the first partner will get 4,000, second partner will get the value is 4,000 and third partner will get the value is 2,000. These are the values which is transferred from previous balance sheet. If any P&L account is given, whether it may be asset side or liability side, that also we have to transfer. But in the question, they are not given, no need to transfer about that. And let's come to the first account, that is realization account. In this account, somewhere we have to record it to partners capital or by partners capital account. That values will transfer opposite direction of this account. If left hand side is available in the previous account, it will come to the right hand side. If right hand side is available, we should record left hand side of the account. First, let's come to the debit side, that is our left hand side of the previous account. Here we won't write step number 1, we won't write the value partners capital. Step number 3, here also we won't write the term partners capital account. Step number 6, we didn't write because it is exempted. Step number 7, so here we have to write to bank account, which is not related to the partners capital account. And step number 8, where we have to write two partners capital account. What is that? Profit. With which account we have to write this one? From realization account. Debit side we recorded the value, same value we recorded the credit side of the particular partner's capital account. So here from where this value we have to record it? By realization account. In bracket we have to mention profit. So already that profit we have to distribute it 2,200 for one partner, 2,200 for one partner, 1,100 for another partner. Okay. First we have to transfer this one. Let's come to the credit side of the realization account. Step number 2, we didn't write the term to partner capital account. Step number 3, here also we didn't write the term partner capital account. Step number 5, we use by partners capital. For whose partner? Shruti and Shilpa capital account. Why we should write? They are taken over some assets. Which are those assets? Furniture and machinery. Which side this value is available? Credit side of this account, so it will come to the debit side of the next account. We should write to realization account. To realization account. In bracket we have to write assets taken over. TO is nothing but taken over. So some first partner Suti has taken over the value of machinery, that is 20,000. Sorry, furniture, and Shilpa is taken over the value of machinery, that is for 15,000. And Shreya, she didn't take anything else. So all the transactions are completed. Now it's time to make the total. Just assume that which side we have a highest value, either the debit side or credit side. In this question, credit side only we will get a highest value. Now make the total of this. Make the total of this. First partner total 40 plus 4, 44 plus 2, 46,200. The same value to transfer debit side also 40 find out this value. And let's come to the total of second partner. 30 plus 4, 34. 34 plus 2, 36. 36,200. So here also 36,200. Out of 36,200, deduct 15,000, we will get 21,200. 21,200. And let's make the total of the third partner. 20 plus 2, 22. 22 plus 1,100, 23,100. And the same value we should write here, 23,100. If anything is there, means we should deduct. Nothing is same value, 23,100. For this, we will give a name, particular name. We will write to bank account. To bank account. In bracket mention that capitals. Capitals balancing figure. So this is about third account what we have to prepare in our this class video. Let's we have to move to the one more account, which is that account now. Bank account. And we will draw the columns for bank account. We should fulfill all the conditions. Debit and credit we should write. Particulars, amount, particulars, amount. So like this we will draw the columns for bank account. Let's we have to move to the bank account. Step number 1, opening balance we should write always. To balance brought down. Value is 6,000, which is available in our previous balance sheet. Only this one they are given. So in the bank we will write to balance brought down 6,000. After that, let's come to the first and the second account. Somewhere we have to use the term bank account. That value we have transferred here with opposite directions. Step number 1, we didn't use the term bank. Step number 2, we didn't use the term bank. Step number 3, we use the term bank. What we have to write to bank account assets realized. Which side? Credit side. In the next account, which side it will come? Debit side. We will write 2. From where this value we have to load? To realization. In bracket we have to mention that assets realized. Assets realized. What is the value? Here already we have to make a total that one. 1,21,500 value they are given. So this is about realization. So step number 3. Step number 4, again we use the term to bank account. Which side is there? Debit side. In the next one, which side it will come? Credit side it will come. We will write by realization account. In bracket we have to mention that liabilities paid. Liabilities paid. The value of liability is 47,500. 47,500. Next, after that, step number 4 is completed. Step number 5 we didn't use. Step number 6 we use the term to bank account. Directly we will write. So which side? We will say by realization account. In bracket dissolution expenses. value is 1500. 1500. After that, step number 8 is not available, that belongs to this account, already been transferred. Under the second account, partners capital account, some way we use the term bank account. Which side? Debit side. Next time it will become credit side. What is the which account we will get the difference? Partners capital account is right by partners capital account. So here only partners 3. Shruti, Shilpa, Shreya. Difference already we have to find. First partner will get 26,200. Second partner will get 21,200. And the third partner will get 23,100. 23,100. And in the previous balance sheet, one more thing we have to left, last one, that is Shruti's loan we will write by Shruti loan value is 8,000. Now we will use the total of the bank account. We will get 1,21,000 plus 6, 1,27,500. 1,27,500. So all the transactions we have completed. So it will come. We will get the total of this. Now all the 3 accounts we have to complete it. So okay, my dear students, in this video we have to successfully completed one question regarding the chapter dissolution of partnership form. If you have any doubts about this question, you can directly contact me and I will solve your doubts. So thank you everyone, welcome. And the next video we have to discuss with the new adjustments. Thank you everyone.